right, welcome back to another episode of the Strive for 25 podcast platform. We're going to be going live with a few entrepreneurs. And right at this moment, I've got Jeff Badu, CPA, founder of Badu Tax Services, serial entrepreneur, multiple books he's written, radio show host, and we're going to be talking a little bit about just entrepreneurship, real estate, all that kind of stuff. If you see the thumbnail, you'll see Dylan Favazza on there, Amazon FBA. He may be joining us. He had to run out on some other stuff going on. And I've got a surprise guest who made time for us today, Rich Groves here in St. Louis. And Rich, if you could, you got a lot going on. Can you just explain a little bit about what you guys are, what you have going on in general and also this week?
Yeah, no, I'm a real estate investor here in the St. Louis area. I host 2 monthly meetups as well for real estate investors. And last year we kicked off the first ever Gateway to Freedom Real Estate Investor Conference here in St. Louis and had great feedback and just had a great experience. So we decided, you know what, let's make this an annual thing. So this year, this week, actually kicking off Thursday, we have the second annual Gateway to Freedom Real Estate Investor Conference, where we have over 30 industry experts coming, taking the stage, talking with our attendees over 3 days, really 2.5 days. Right now, we sold out our platinum tickets, which gave everybody a half-day business intensive on that Thursday. And then Friday and Saturday is where like all the big time magic happens. You know, it's for everybody. You know, any investor, real estate investors from, you know, you've been reading articles for 30 minutes to I've been doing deals for 30 years, that kind of thing. Anybody in between. That's what this conference is for. It's for building connections, finding your tribe, finding your team, and making connections with, like I said, over 30 speakers here in St. Louis.
That's awesome. Thanks, Rich, for sharing that.
Sure.
And again, this is all part of a mini series called 100 Stories of Increasing Income. You know, in this environment, you know, 56% of Americans don't have $1,000 saved. There's a stat that came out that $60,000 of household income, there's about 47 million households that are not making $60,000 of income.
Wow.
And, you know, with my journey of starting a podcast and kind of going down this creator world, which has never, ever been on my radar until, you know, 2022, I've just seen so many different people create, you know, certain lanes or opportunities to be able to generate extra income on side of what they do. And a lot of it ends up being, you know, 9-to-5 jobs, people doing something on the side, whether it be a second job in the field or maybe a different business outside of that field and potentially building it into, you know, a main hustle. And one of the things I love about having Jeff on here, and also he's one of the sponsors for the show, so I got to give a big shout out for Jeff, you know, believing in the mission, what we're trying to do. So thank you, Jeff, on that, is that, you know, building your businesses and then also building your real estate portfolio and also teaching others about the power of mindset. In one of your books, Infinite Mindset, I forget what's the title.
Infinite Expansion.
Yeah.
Yes.
So rolling all the mindset stuff, the real estate stuff, okay. And the power of real estate. So I just love, because, you know, in my mind, right, like all this came together for me because I started buying properties, you know, 15 years ago as a primary residence, save up, buy the next one, turn the old one into a rental, not having a mentor, not knowing what I'm doing, just figuring it out. And then over time, after 5, 7, 8 years, like, oh, this is working. Man, I wish I would have bought more of these. And, you know, being in a sales job, okay, you know, not everybody's in sales. Not everybody has that type of, you know, push the pedal on the gas to be able to increase income if things aren't going right. But that was my way to increase income back in those times, is just press the gas on the pedal. And so I was able to save more money, invest, and then by saving money, choosing to invest in various things like stocks, real estate, business, you know, 401k, all those things. But real estate is the one thing that, well, one, gets me excited to talk about. But two, I think the power of real estate, there's some things there that not everybody knows. And maybe we'll dig into that a little bit. But again, the point of this, especially right now with how much the dollar's been devalued over the last 4 years, I think I've seen stats like, you know, your dollar has lost 25, 30% of its purchase power over the last 4 years. And when you look at the stats, you know, real median income is actually pretty flat. It's basically flat from 19 to today. So if you're not increasing income, you're getting left behind. And if you don't own assets in an inflationary environment, you're getting left behind. And so if someone's making $30,000 a year, $40,000 a year, and if they can figure out a way to be able to generate an extra $1,000 of income, like that's a massive opportunity to be able to not only save money and invest potentially, but belief that, hey, you have control of your future. So that's the purpose of all this stuff. So Jeff, I want to just come to you for a second. How did you start? When and how did you start your own CPA business, and what year did you do that?
Yeah, so basically, long story short, I was first and foremost born and raised in Ghana, came to the US when I was 8 years old. And fast forward, I attended the University of Illinois Urbana-Champaign, where I received my bachelor's degree in accounting, as well as my master's degree in accounting. And when I was there, I was interning at a company called PricewaterhouseCoopers, or PwC for short, which at the time, and probably still is today, the #1 public accounting firm in the world. And basically, I was doing that and working on my own business plan. And in September of 2016, I decided to leave PwC, where I was working full time, and in exchange for a full-time entrepreneurship ticket. And that's when I went ahead and started Badu Tax Services, LLC, which today is a tax firm, a CPA firm that does tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the US. And we also have clients that are physically based in over 25 countries at the moment. We have 3,000 plus clients in our database currently. We have 25 team members that are across 7 different countries. Our firm is 100% remote, 100% virtual. We specialize in tax strategies for clients, especially business owners and real estate investors. And so overall, what we do is we craft tax strategies. We look within the tax code and see where we can save clients money on taxes so they can put that hard-earned money back into their pocket and into their business and investments. And that's all tied within my purpose in life, which is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. Yes, indeed. Yes, sir. Yes, sir.
Yeah, I've seen a lot of that firsthand. So starting your own business. I mean, I'm going to just fast forward to today. Let's just say that decision was today. Would you do it, not do it? Would you be scared to do it in this environment?
Yeah, I mean, when I started, I was scared to death, right? My heart was pounding every morning when I woke up. For the first month or so, I was extremely nervous, extremely, pretty much shell-shocked by everything that was going on. So to answer your question, would I do it again? Yes, I would do it. I personally would do it. And the reason why is because it's something that I was planning on for a very long time, right? You're talking 5 years working on a business plan from my freshman year of college in August 2010, all the way to me graduating grad school in May of 2015. And then even after that. So I had a game plan. I had a plan going in, and I knew pretty much what I wanted to do. I didn't know exactly when I wanted to do it by, but I knew what I wanted to do. So I think what I would advise others, me personally, I would start it from scratch again, right? I would do what I did before. But if there's one thing I can advise is start with a business coach from day one. Someone who's been there before you, done that before you, done it better than you, faster than you. And what a business coach would allow you to do is avoid making mistakes that you would have made 20 years from now. I kid you not. Imagine 20 years from today, 2044, right? Imagine that period of time, the mistakes you would have made then. A business coach can potentially help you avoid those mistakes that you would have made in 2044, right? So if I would advise anybody, if you're trying to do this thing from scratch, if you're really trying to start a business and really getting into the ultra success, then I would say have a business coach, someone who's been there before you, done that before you, and follow their blueprint. Yeah, you can add your twists and turns and all that, but don't get too sidetracked on that, right? Follow it step by step. They say step A, do this, you do that. Step B, do this, you do that. Follow that step, ask questions along the way, And if you're not going to go that route, join an already existing business, right? Like, for example, if you're looking to get into ride sharing, then join Uber. Uber is a business and you're in partnership as an Uber driver with Uber. Instead of you trying to start your own taxi business, lobbying with the states and the governments and all of that stuff, instead of doing all of that, partner with Uber. Let Uber know the value that you add. Maybe you add value that goes beyond driving the car on their customers' behalf. So basically, find something that can truly add value, and then present to them a deeper partnership with that. So, long story short, if I were to go back in time, and basically, if I wasn't starting my business already, I would go ahead and start it. But that's because I put so much time and energy into the research component. But I would have had a business coach from day one, as opposed to 2 years after starting a business when I was ready to give it up. Actually,
Ready to give it up.
yeah. In 2018, I was physically, mentally ready to give up my entire business. Whether it was a sale, just letting it go, because I was burnt out. I was tired. I was making money. Life was decent, but I was working 80 plus hours a week because I was working more so, in the business rather than on the business. And what a business coach can do is teach you how to do the opposite, work more on the business rather than in your business. And now I'm proud to say, on average, I work 21 hours a week as of 2024, essentially.
Okay. Rich, I'm going to come to you in just a second on this topic. But if you look back on that journey, Jeff, you mentioned potentially walking away after all, I'm sure heartache and frustration and burnout, like you mentioned. What was that first domino that you got to work on, or maybe advice from somebody that put you on a plane to then say, okay, yes, this thing worked. Maybe I can figure this out. Maybe I can get this domino falling in the right direction.
Yeah, so I was fortunate enough in April of 2018, right after tax season. So April 2018, tax season ended April 15th. And I all of a sudden get this message from who's now my business coach, by the name of Rick Justice, who's also married to Monique Justice, his business partner. And basically, if I can give like some key things that they taught me, is number one is put life before work, right? It sounds counterintuitive with the world we live in nowadays. We're all about work, right? Work hard, play hard. And they always say work-life balance, right? But in our model that we teach is life-work balance. You spend 33% of your time at work, 67% of your time on your life, including 33% of that being sleeping, right? Eight hours a day, preferably. And so one of the key lessons I learned is that have a balance in life. But of course, in order to have that balance, you got to make some money. You got to have some money in the bank. You have to have passive income, cash flow, right? The name of the game. And in order to do that, you have to have a team. There's two things that make or break any business. It's team and systems. Without those two things, you might as well forget about it. Because if it's just you and you don't have a team, you're going to get burnt out like I did in 2018. If you don't have systems, then your team is going to be now the hamster on the wheel instead of you. Because there's not going to be a set of criteria, a set of tools, steps that people can follow, basically a proven system that allows you to achieve things basically more seamlessly. You don't have to spin your wheels when you have a system like the McDonald's system of the franchise system. That is a system that allows them to run a franchise successfully. They know how to have, for example, the folks that make the burgers, right? They know how to negotiate with certain vendors and everything like that. Those are systems. When you walk into a McDonald's, you should get the same exact customer experience as the McDonald's that's, 2 blocks away from you. And that's the power of a system, is that customer A walks in and has a great experience because you did step A, B, and C. You go to that same store down the street, you should get that same seamless experience, and you get A, B, and C. One quick example, one store that I love. Now, this is not relevant to me, but it is for my wife. The store Sephora. I always told my wife, Sephora is such a great customer service business because the moment you walk in, you are treated like a true customer, a true human. Somebody's going to come up to you and say, hey, can I help you with anything? You literally get a representative that walks, holds your hand and basically walks you through everything that you need. And I'm thinking, man, when I go to the one in Chicago, my wife and I go to the one in Chicago versus the one in Dallas, we're getting the same exact experience. Why? Because they have a system, right? Now, I don't know Sephora's business model. I haven't studied it yet, but I have known it as an actual person who walked in the store. They greet you. They basically shake your hand and they say, how can I help you today? How can I be of service to you today? That to me means they have a system. That means they're not spinning their wheels. They have basically a methodology that they go about servicing their customers. And guess what? That makes Sephora one of the top makeup, one of the top cosmetic products companies in the world today.
Systems. I mean, in my world, right, being a mortgage, we deal with chaos every single day. A lot of files have similarities, but certain things come out of nowhere. What was that first system that you put in place?
Yeah, that's a great question. There's a lot of systems that we put in place, but
or a role.
Yeah. So basically, we have a process in our firm. It's called the Phase 7 system, which was created by my business coach, Rick Justice, Monique Justice, and myself. And basically, the system is a 7-step tax preparation system where you first meet with the client, right? You meet with somebody on the team to go over your specific situation, all the way to the last step where we reach back out to you throughout the year to see if there's anything we can assist with, right? Check in, see how you and your family are doing. And the reason why we created that system is because most accounting firms, they're not even thinking about that. They're not doing step 1. I mean, they are to some extent, but they're certainly not doing step 7. Step 7 is the critical piece, the customer experience, the checking in on you, wishing you a happy birthday, right? The anniversaries that you have coming up, really digging deep into that relationship. And that system is the first year we created that system, our business generated 7 figures in revenue. It was the first year we generated 7 figures in revenue. And to this day, we use the same exact system. We refined it though, and it consistently generates 7 figures. And at some point within the next 2 years, we will more than likely be at 8 figures for the first time in the firm's history.
8 figures is quite different than 7 figures when you say.
Exactly. But I would say this is what my business coach told me, is that it's much harder to get to 7 figures than it is to get to 8 figures. Much harder, because when you get to 7 figures, right, it's a big hurdle. It's a big obstacle that you have to overcome. And to get to 8 figures, all you have to do is really just continue building the people, continue building the system, bringing customers, higher, better quality. And all of a sudden, you will eventually get to the 8 figures as long as you maintain what it is you're doing and refine, retool, clean up the kinks on the things that you're not doing so well.
Okay, Rich, I'm going to get to you in just 1 second. I want to say one thing. We got viewers coming in on Twitter, on YouTube, on Facebook. If anybody has any questions, throw them in the chat if you can. All right, Rich. With all that being said, systems, processes, real estate. Where do you want to get? Just add in something here.
No, I 100% agree with everything Jeff's talking about. I mean, the whole burnout thing, that is a real thing, especially like with real estate investors. I'm not saying it's less true in any other industry, but you get brand new like real estate investors who just saw a YouTube video, they just saw some kind of ad on Facebook, and they're like, wow, I want to get into real estate investing, and they dig in. They have no education, they have no systems, they have no mentor, and they're done in 3 months. They're done because they thought it was going to be this, okay, I push a button today and tomorrow I go to the bank, that kind of thing. Maybe not that fast, but a pretty quick turnaround. It's a get rich quick scheme. It's not a real business model. But the ones who stick around and can make this a real thing long term are the ones who either developed a system or bought a system. And by buying a system, it's usually with a mentor. They have a system in place and they hand it over to you or show you how to do it, that kind of a thing. So I definitely believe, I call it paying for speed. I believe in paying for speed, in that you ramp up how fast you learn something by hiring a mentor, hiring a coach, somebody who's going to keep you accountable and make sure you're doing the things you should be doing so that you learn to do them the right way. And that way you do get burned out a lot less, a lot less often than somebody who doesn't have a coach and they're just twisting out in the wind, don't have their compass isn't pointing true north. They're just going out any and every direction. So 100% agree with what Jeff's talking about there. And I've done it both ways. I've done it the wrong way and I've done it the right way. When I first started out, I passed. I almost bought into a mentoring system and I passed on it. I thought, well, I'll just learn things my own way. And it didn't take me long to say, nope, I've got to get a coach. I've got to get a mentor. I got to get a system. So I did.
At that point in time, what was the main priority that you're working on the businesses?
Yeah, I mean, it was learning. It was education as well, like learning the right way to do things, and a lot of that was vetting. Because if you don't vet your coach, that could be a big mistake too, right? So a lot of that was vetting the coach, finding out, talking to other people in the area. Hey, have you ever heard of this group or worked with that group or whatever, and getting feedback. Obviously, you could talk to 10 different people and you get 10 different opinions, but when there's a consensus that something's good, that usually points, you're usually getting good advice. So my point at that time was learning. It was education, learning. I started out as a wholesaler, and I still do wholesale deals, but started out as a wholesaler, and wanted to learn as much as I could about that, and then bought some rental properties and learned as much as I could about that, and then did some flips. So I mean, it was a process. I didn't just come in and say, hey, guns a-blazing. That's another thing that burns people out, is they try to do everything instead of just finding one niche to focus on. Do that very, very, very well before you move on to something else.
And when you started that journey, were you doing that all in, or having a job on the side, or what was going on in your world at that time?
Yeah, no, I had a job at the side. I actually still have a W-2 job. I'm a corporate trainer, and I say this all the time. It'd be a lot easier to quit this job if I didn't love it. I love being a corporate trainer. I love training people and teaching people and educating people. I love it. But I also have flexibility in my job that I know a lot of people don't have. So with that flexibility and freedom that I have with my existing W-2, I'm able to stay there and do real estate investing and everything I do in that. So, but if somebody hates their job and they just got to find a way to get out, then I would even more strongly encourage you to get a coach, because you're going to get out faster. If you can get a coach and find the right way to do things, you're going to find your freedom a lot faster.
Totally. I want to just fast forward to today. I mean, we're in terms of real estate, we're in unique times. Well, there's always unique times along the last how many decades, but from my personal perspective, just things have changed so fast in multiple ways in the last 4 years. Rates went from 3% in 2020 to 2.25%, which we'd never ever seen before. 3.25% had always been kind of the floor where I'd seen mortgage rates, and that had happened like a few times. 2013 as being one year, 2016 a different year, and then in 2022, rates basically doubled in 6 months as inflation continued to, carry on. And so we had this very, very low interest rate environment to a rising rate environment, and then now we're kind of in this new normal where, you have this golden handcuffs, I guess you'd say, where inventory is tight because people have a 3% rate. They're never going to sell, and if they do move, they're going to keep it as a rental. And construction's not, continuing on fast enough to replace supply. And so, I mean, my industry is suffering in terms of mortgage. There's less transactions, lower transactions than we've ever seen since like 1984 or something like that. Housing values have increased at certain percentages. I don't know the number. I do apologize. But I think when I was doing a video a while back, the median home price when I bought my first house in 2009 was $233,000. And today, median home prices, I think, is like $490K. And median income at the time was like 56, and now it's like 82, which actually it's higher than what I expected it to be. So I say all that to get to this point. If somebody wanted to get into real estate today, again, you can never predict the future with past precedent. What are some of the things that you're seeing, Rich, in terms of people getting in the game in the last, say, 12 months, having success or pointing towards success and getting into the game? Oh, we're losing you on audio.
Oh, sorry about that. I muted so I wouldn't have any background noise there. Sorry about that. Yeah, I mean that's a great question. I mean you're still seeing people having success in all three of the facets of regular, are they, wholesaling, buy and hold, or flipping? But you got to be a little more creative sometimes. I know like subject to mortgages are huge right now. If you can find those situations where people want to leave and you can purchase the home, subject to the existing mortgage, that's big right now. But man, it's just creative financing is becoming more and more because more and more important because your traditional ways of doing things, just a lot of times the math doesn't work. Like you said, the average purchase price is way up and all of this stuff. So it's finding those distress situations and working with home sellers who have a need that you can help. And I'm not talking about, and I don't want to get that confused, that I'm not talking about people going out there and taking advantage of people. That's not what I'm talking about. I'm talking about finding a solution for people who are in a tough situation, and find a solution that works for them and works for you, and you can look yourself in the mirror the next day, and be okay with that. But I mean, because real estate investing, as far as an investor goes, you're in a couple different things. You're in a marketing business, and you're a solutions business, right? So you're finding solutions for people, and then you have to get people to know that that's what you do. So you're marketing yourself all the time because it's such a small overall, and all the homes purchased. As an investor, it's a lot smaller of a percentage than people think that it is that investors buy. But distress situations, I think last time I checked, it was like 4% of all transactions were distressed situations. So just got to be more creative.
Okay. So if I'm a new investor, and you mentioned the term wholesaling early on, that's what you did originally. If I'm a new investor and I've got a good W-2 job, I'm on an incline of trajectory of income, and I say, you know what, like I'm not finding what I want to find from a primary residence standpoint in terms of value. I've got some skills to maybe do some work on my own to fix some things. I'm going to go find a distressed property, maybe from a wholesaler, and then, buy it. Say I've got the cash to do the financing on say a fix and flip loan, put 20% down, finance the renovations.
Yeah.
Are there deals out there that can work for somebody that if you look hard enough or find the right people?
Yeah, there are, and there are still deals out there. It's just, I would definitely say if you're wanting to get into like a fix and flip situation, definitely team up with a wholesaler. One you could trust, one who's going to make sure that you get a decent deal, somebody who's not stripping and sucking all the meat off the bone. They're leaving you some room to make a little money on your side. But yeah, definitely find and build a relationship with a good wholesaler who's good at what they do. They will find deals. The deals are a little skinnier than they've been, but you can still find deals out there. I mean, shoot, even when things dried up, I mean, shoot, you could just wake up and make money as a flipper, 2 years ago, right? I mean, it was just the situation was incredible. Everything was blowing up. Then when the rates started going up, it was a little harder, a little harder, a little harder. But you still, if you find a deal, you can make money, and there was good money to be had because home prices aren't crashing or anything like that. So the situation is find a good wholesaler that can get you a good deal, and make sure your numbers work, and be realistic about your numbers. If you don't No, if you're so brand new, you don't even know how much a new roof costs or something. Get, again, team up with a contractor who is fair and can give you a good bid. Get a couple bids on a rehab costs, and go that way. Especially if you're brand new. If you're brand new, my biggest lesson is build a team. And building a team isn't hiring, a bunch of folks to work for you. It's reaching out, finding skills that other people have that you may not have, and leveraging their skills and what you can bring to them, giving them a job and employing them, and whatever, things like that. That's leveraging, that's building your team. So find, get a couple contractors to have them give you a couple different bids, and then, employ the one that you like the best. But be honest with folks. That's the other thing too, is just, look, I'm looking to do this rehab. I need a couple bids. I'm going to go with the team that I, not necessarily the cheapest bid, but the one that I feel the best about, and the ones that I'm feeling I'm feeling that they're going to be able to treat me right and get the job done on time. And there's plenty of deals out there. There really are still today.
So I'm going to ask Jeff a personal question. So I know that from afar that you invest in real estate and you've gotten into some multifamily along the way. From a standpoint of buying and selling, potentially flipping, or buying and holding, what are your thoughts on just your journey and kind of going forward with the process of investing?
Yeah, so I appreciate that, Joe. So I would say personally today, I'm at a very interesting phase where, so currently, present day, we have 171 units, 171 units that we own and control. Primarily, so we have some on the south side of Chicago. We also have some in Northwest Indiana, like Hammond, East Chicago. So
Gary,
I mean,
is it close to Gary?
No, yeah, not quite Gary. Just, I mean, we used to mess around.
Okay.
Yeah, so we don't. So right now, we try to only invest in B class neighborhoods, right? B class areas, and B class area like Hammond, Indiana, for example, where it's more stable. It's like pretty much, I call it retirement money, where you know what you're getting when you get into the market, right? It's stable, it's consistent, people with good income. You're not going to get a ton of appreciation, but you're going to get stable appreciation, stable cash flow. So now that's our strategy. So we're actually letting go of some of the things in Chicago. We're actually in the process of selling, liquidating some properties in Chicago, making sure our liquidity position is strong, and then throwing some of that into the Indiana. I really love Hammond, right? Hammond is a big market that we're investing in right now. We got a good management team out there. So, I mean, overall, that's really the strategy right now, is continuously acquire the Class B assets in Indiana, Hammond, Indiana. And the reason why I like Indiana in general is because it's landlord friendly, meaning the state has laws that favor the landlord rather than the tenant. And as a landlord, you want to be in that situation, right? Indiana is it's not it's not a high price market, right? You're not paying California prices in Indiana. You're paying some of the lowest prices when it comes to cost of living and everything like that. So, the chances of people moving into the market in terms of like tenants and just like residents in general, I would say is pretty good, because you know what you're getting basically. And then it's also close to Chicago. So you have people who actually work in Chicago, and they get Chicago money, but they pay Indiana cost of living, which Indiana cost of living is much lower than Chicago. So overall, my real estate journey, it's a very, very long story as to how I started and everything like that. But right now, our goal is to maintain the stable properties, the ones that are doing well, get rid of the ones that are not doing so well, low cash flow and everything like that, and then focus on the Indiana portfolio, which is doing pretty good, right? Knock on wood. And just keep pouring into that. And the fact that we found one of the things that can make or break you in real estate outside of location is your management team specifically, right? Your management team, you got to have somebody that's really good, because your manager is like they're pretty much like you're the CEO of the building, right? You're the CEO, you're the owner, the landlord of the building. But then you have a general manager, a GM, basically. Your GM is basically your property management team. Without a good GM, you're going to fail drastically, unfortunately. And I've been burned before. I've been through bad real estate situations before. I've lost a lot of money in real estate, but I've also gained a lot of money. But I would say that, in terms of my specific strategy in real estate right now, it is buy and hold on to the stable stuff, let it keep riding out. I mean, 30 years from now, the properties are bound to be $100,000 property today is bound to be $500,000 at least 30 years from now, at least. So imagine if you have 5 of those, 10 of those, right? You don't need a ton. You don't need 171. You don't need 10. You don't need 20. Sometimes all it takes is 1 or 2 or 3. You ride the wave, let it keep growing, let it keep, cash flowing. And all of a sudden, if your dream is to become a millionaire, you will be. If your dream is to become a multimillionaire, you will be. And if your dream is to become a billionaire, you can do the same thing with these strategies with Indiana properties. So that's our goal right now. Keep the stable stuff, get rid of the bad stuff, and invest in landlord-friendly neighborhoods like Hammond, Indiana.
You use that B word again. Billionaire. I'm laughing because we kind of hit on that when we did the podcast. I guess it's been almost 18 months. Maybe it was 2022 or 23. I forget which year it was. Mm-hmm. And what I remember about that so well, and I sent that episode to so many realtors because it was speaking in that part of the podcast directly to a realtor. And we kind of went through the example of, okay, if you're a realtor and you want to be able to leverage the ability to do a cost segregation, you have the ability to do it automatically because you have your license. Otherwise, you have to fill it into the real estate professional and the hours and all that stuff that I'm not an expert on. And we went through the example of buying a multifamily for $400K and then the 25% and then it's like, in that scenario, they're making $100,000 and they just put a $50,000 back in your pocket of just what the number was. And then you can use the extra savings to then go buy the next one and then rinse and repeat. And then in that conversation of stacking and stacking and stacking, you inserted the B word, which with inflation, maybe it's more feasible for somebody to get there if you're building a business and adding real estate. And that's the thing I love about this conversation so much is that, the best investors that I see are the ones that don't nickel and dime a deal because they are building their business and increasing income. So that way they can look at a deal. If it's good enough in 2 or 5 or 10 years, it's good enough to be able to just set it and forget it, manage it, go focus on generating more income, which could potentially be more of a leverage activity for your time. So I want to get to Rich on this because, for you, we're talking about real estate, fix and flip, wholesaling ends up being a lot of the activity in your world, which is very transactional. I don't personally see a lot of people get into the buy and hold, and maybe they insert a sliver of that into your portfolio and you can grow over time. But what do you see a lot of the people you come across in terms of mix between flip wholesale over short-term type of transactional versus the long-term?
I mean, I see a mix. The people in my sphere and all the investors I come across. I mean, shoot, in over 11 years of being in real estate investing, I've networked with thousands and thousands of real estate investors, and some of them stay on the sidelines and never even get in. Right? They say they want to, and they get around people and they want to, and then it don't take action. The biggest thing is take action, whether that's going to be a wholesaler, a fix and flip, or buy and hold. But I see it all. I just do, Joel. It's people when they get in, they think, some people think they want to just get in and they want to get into wholesaling because that's what they heard. They said, well, the easiest entry into real estate investing is to assign properties, because there's a lot less risk and all of this stuff, right? So people they think they want to get into wholesaling. Some people kick off and they want to do buy and holds, which, hey, I go for it, but I think you need a little more education before you just start buying and holding rental property. You need a little bit more education and knowing what you're doing, but some people do. And so, fix and flips, if you're savvy enough to either, Some people want to do the work themselves. Talk about active. Some people want to do the work themselves, and that's fine. It's going to take them a little longer, but they do it, right? And so when people say they want to kick off doing rehabs, I always ask them, do you have a contractor? Do you have a team? Or are you going to do this yourself? And the reason I approach them that way is because you're going to pay for it one way or the other, right? You're going to pay for it either with money or you're going to pay for it in time. Some people want to do the rehab themselves because they think they can save money, and they can. You can save money doing the rehab yourself if you're skilled enough to do it correctly, but you're going to pay for it in time. You may save dollars, you're going to pay for it in time. And then the people that want to hire contractors and, hey, I want to get it done. Yeah, they're saving time, but they're paying a little more money. So it just depends on what you're comfortable with. And I tell people that, but I see them all. I see it all. I see I see real estate investors who jump in fixing and flipping, jump in wholesaling, jump in buying and holding.
Good stuff. Good stuff. And that kind of comes back. I showed this message from Marco Shiro. He's another podcaster, YouTuber, financial firefighter. He's in Hawaii. And, when I hear Jeff talk about building the systems, putting a team in place, and fast forward the clock, however many years, you mentioned, was it 21 hours a week that you're able to limit your time in the business? And then it's like, okay, what does that mean you have time to do? Maybe it's visit Hawaii, go on vacation or somewhere else, or spend time with other ventures you want to work on, right? And, it comes back to the why. Why do you put all the work in? Why do you put all the extra time, energy, and blood and heart sweat that you got to put in to learn something outside the box of your current lane? And, why do we do it? There's a reason for all of us, but not everybody wants to do it or wants to put the work in, and that's okay. But the people that do, like, that's what this channel is for. That's what your guys' platforms are for. The people that want to get ahead and take back more time in the future. And that's what this is all about. Mark did have a question for us, so I'm going to switch to this. So, Jeff, you kind of hinted on that also with decisions to go from Chicago, Illinois to Indiana, and other ones just that come to mind, California, New York, probably Nevada, I guess. I don't know. There's probably a few others. How would you pinpoint some of the concrete metrics that push that decision? Landlord-friendly laws, from a general standpoint, that makes sense. But what are a couple of specifics that come to mind?
Yeah. So, number one is how soon you can evict tenants. That's probably the biggest one. Chicago, 3 to 6 months. Indiana, 30 days to, 2 weeks to, 2 months, for example, let's just say. So that to me is a big difference, because I've had tenants in units that have literally been there, not paying rent for 3 months, 6 months. And it's like, for example, when they put in the moratorium and everything like that, it's like, man, you literally cannot evict people. And you still have to do things like provide them with, utilities and all that stuff, which is insane. And then in conjunction with that, squatter laws, right? In Chicago, somebody can literally walk in your unit right now that you live in and basically say, hey, this is my property. I'm living in it. And in order to kick me out, you got to basically take me through the eviction process. New York is even worse. Never in a million years would I ever touch New York real estate. But basically, I would say the number one thing when it comes to the landlord laws, and this is very important, this affects your wealth, this affects your finances. It's going to be basically the ability to evict and the squatter laws in conjunction with that. The second one would be, this one isn't really big, but like rent control laws, the landlord, the not so landlord friendly states, meaning the tenant friendly states, they use, some states have rent control, meaning you cannot increase rent by a certain amount. And I know like some of the politicians have tried to implement certain things on a national level. So I would say that's not one that really affects us too much, because usually when we buy a building, the rents are usually on the market already. And so our goal is to add value to the property. It's like a business. Your goal is to add value to your customer. The only way that you can receive money, receive income, receive wealth is if you add value. How much you get paid is directly related to the value that you provide to your employer, to your clients, whatever the case may be. So the more value you provide, the more you're going to get paid. The more value you add to your buildings, the more they're going to be worth. It's basically the rule of life, essentially. And so I would, if I could point two laws or two things specifically when it comes to landlord friendly states, it would be the ability to evict tenants, how fast you can and how smooth of a process it is. And then number two is the rent control laws, essentially.
Good stuff. Good stuff.
Yes, sir.
Yeah, I mean, Rich, how would you describe Missouri?
I mean, I have rental properties in Illinois too, but it's mainly in the St. Louis area. As you know, you got Illinois and Missouri on the border there, and I have rental properties in Illinois. That it sucks. Your taxes are higher. Your taxes are higher. It is harder to evict to evict tenants. Missouri is a lot more landlord friendly than tenant friendly. So that's my goal. Actually, in the next 12 months, is to start transitioning. Maybe doing some 1031 exchanges and getting rid of my Illinois properties and investing more in Missouri. Just because it's getting more and more ridiculous. It's ridiculous. I mean, literally, there's a thing now in the county that I own rental properties in, where if a tenant falls behind in rent and you go to evict them, the county basically assigns them a liaison, and the county will pay off their past due rent. But the thing is that's just that's just giving you a Tylenol for a headache. It's not finding the cure for the headache, right? So you're gonna go through the same thing the next month, and it's just a constant headache and a constant battle.
I love it. Jeff, I know we're running up on your time clock. I want to just pose this scenario and just get your thoughts on this. And Rich, I want to dig into your event before we get off here. So the average age of a first-time home buyer based on 2023 data from Bankrate is 36 years old. And going backwards in time to around 2019, I think that number was around 28 years old. So, I mean, it makes sense. Prices have gone up. Rates were low and then they've gone up as well. So it's making homes less affordable, obviously. So 36 years old is the average. And I'm still seeing certain people that are focused on getting ahead, generating income streams to save money, getting in the game early. This is not a client of mine, but a friend of mine in the mortgage industry had their kid set up to be able to purchase their first property at age 20, had the credit, had the savings, had the job history, worked in a trade, like ready to go buy a multifamily. And that's a little extreme. That's very rare in my opinion. But I've seen, and I've given the example of, well, if you can stockpile cash, and let's just say at 25, buy your first property. And a lot of the examples I give on my platform, I use this 150 price point, save up, buy the next one at 250 2 years later, and then 350 and then 450. Each time turn the old one into a rental property. And then if you apply, 3 or 4% appreciation on that portfolio, that's a $3 million portfolio in 30 years. And, when you're 25, it's impossible to think 30 years on the road. But still, if you're getting in the game at 25, you got a 10-year head start on the rest, a 10-year head start on the rest of the average people. And it's powerful. And there's people that are out there that are making things happen, that are creating income streams. And so, a guest of the show, DeMarco Anderson, full-time IT, had multiple jobs, remote. And the mindset part of it is just different. Kind of going back to the income part, they're focused on increasing income. They don't care what the market's doing. They're looking at it long term and they're stockpiling cash. It doesn't matter what the market does or rates do and all that. So the real estate part of it is just the byproduct of everything else. Where a lot of people, their focus is on the real estate and the strategy, and it's got to be perfect. And whereas like you're inherently missing opportunity. So the idea of someone at 25 years old buying the first property, what does that mean to you, Jeff?
Yeah. So, I mean, it is a great question. And I would say this, in that I mean, I do encourage people to get into home ownership as soon as possible. The sooner you get in, the better. Some key things to note, though, is number one, it all starts with the education, right? It's not just about going out buying your first property. You got to get educated. Doesn't mean you have to spend thousands of hours like I have. It just means get something, right? Read a real estate book, go to a workshop, join a club, a real estate club, something, get you the education so that you can avoid making those mistakes. But in general, to the point of home ownership in general, yeah, they have these programs nowadays, 0% down, 3.5% with the FHA, 5% conventional, right? So get in, but before you do, get educated, ensure you have liquidity, you have reserves. If there's one lesson that I can teach anybody in real estate, it is the importance of liquidity, right? That 3 months, 6 months of expenses saved, cash in the bank, even after closing, just like the lender technically requires you to have, but maybe not with your other expenses, just with the mortgage. Apply that same principle to all your expenses. And so it is a bit of a sticky thing where it's like, okay, let's say you don't have a lot of reserves, but you're ready to get in and you have a great opportunity. Should you go ahead and approach it anyway, or wait till you have reserves, get more comfortable with the real estate, but risk maybe the property that you're looking for not being there anymore, right? So for me, I think it really comes down to get educated to the point where you're comfortable enough and try to build your liquidity and your reserves to the point where you are comfortable enough to buy your first property, and preferably buy your first property using one of these programs, right? Like FHA, 3.5% down payment. You buy up to 4 units. Now you got 3 tenants paying your mortgage, plus you put a little extra money in your pocket and you get to live somewhere basically for free, right? That scenario is amazing because you're basically killing 2 birds, with 1 stone. You found a place to live for free, and you have tenants paying you money to build you equity. I think that's the most ideal scenario for buying your first property. But it all goes back to make sure you have that education, make sure you are attending the workshops, listening to podcasts like this. Shout out to the Strive for 25. And then overall, you just want to make sure that you have the comfort level enough to be able to buy the property. So buy the property as soon as you can, in my opinion, right? Don't let all the noise about interest rates, home prices may go down in the future when they just keep going up, right? It's like, don't let all that noise distract you from your main goal. And so I think people in general should be buying homes now, right? Buy as soon as you can when it comes to this real estate stuff. Yes.
Yeah, I'm on the same page.
Absolutely.
Any last thoughts before you have to drive off?
Yeah, I mean, I would say first and foremost, Joe, I definitely appreciate you for having me on your show today. It's amazing. Love everything that you're doing. Definitely nice to meet you, Rich. And overall, don't let the noise that you hear distract you from your primary goal. There's so much noise in the world. There's elections, there's interest rates, there's home prices, there's all these things going on. Home ownership is not as hard as you think in terms of getting in. But before you get in, get some type of education. Watch that webinar, watch that video, read that book, right? Do something to get your mind prepared for what you're about to invest in, because it's a big investment. And so don't let anything distract you. Go ahead and get into the real estate, and preferably with the education and with some reserves. And with that being said, if you ever need any information, anything from me, the best way is my personal website, jeffbadu.com. That is JEFFBADU.com. There's a ton of educational materials on there that I'm giving out to the world, 90% of which is 100, complimentary. And, I love speaking. I love educating when it comes to finances, wealth, and taxes as well. All right.
Okay, I'm going to throw one more thing in here before you leave, Jeff, because
Yes,
here we are on this live platform. We're using Restream, which is putting this out to Twitter, X, YouTube, and also Facebook at this point. So 36, I mean, if we were sitting in front of a room of 36 people, we would probably be excited.
Yes, sir.
But when you see 36 online and you think, well, all these people who are got 1 million followers or 100,000 followers and 36 is not a lot. I bring this up because I'm going down this platform. We're going to be continuing to share and continuing to come on and do these lives with various entrepreneurs that are doing things and sharing stories and inspiration and guides and all these things. And when you fast forward the clock a year or 2 or 5, if you keep on going naturally, you're going to get better at what you do, and you're going to have the results come, and growth is exponential. It's not linear. And you're talking about getting a coach or learning the real estate game or watching the webinars. Like, I know I'm saying this to my past self, like, don't think you have to have all the answers set. Just get in the game and surround yourself around it. It takes weeks, months. You're never going to be able to get the results in a couple of visits to a group or 5 visits. It's going to take, you're changing your life. You're changing the way you look at life. It's going to take months, years to get the results you want to see. I know Mark is still on here probably. We talk about this all the time on his lives, that you may not see the results of your investments in real estate for 5 years. But when you get there, it's all worth it because you open doors that you otherwise wouldn't have had an opportunity to open.
Exactly. No, that's a good point, Joe. And I would say you are totally right. Right. You're not going to have the perfect first investment. You're not going to be a perfect real estate investor. You're not going to be a perfect business owner. But, one thing that I appreciate that I did back in 2016 was I made the jump to become an entrepreneur. I made the jump, right, to get in the game. Because, I've made mistakes along the way. But guess what? 20, 30 years from now, the mistakes that I made now is basically preparing me for a much better journey, a much better future, later down the road. But if I hadn't gotten started, now I got to wait another 20 years to make and learn those mistakes potentially, unless I hire a business coach who holds my hand every step of the way to help me avoid making mistakes I would have made 20 years from now.
Yeah.
All right. Yes, sir.
I love it. Well, Jeff, thank you so much for making time out. I mean, the wealth of knowledge there, just spitting out game. So obviously, we'll do it again. And we'll dig into this event coming up because I have a lot of questions for you, Rich.
Sounds good.
Yes, indeed. Appreciate you, fellas. Yes, indeed. Thank you, everybody, for joining us. Yes,
all right.
Indeed.
Thanks, Jeff.
Thanks,
Yes,
Jeff.
sir. Yes, sir.
And Jeff, I'll throw the website and your email if that's okay. Or
Yeah, perfectly fine. Yeah, anybody can reach me anytime. Yes, indeed.
Okay.
All right.
Cool.
Thank you. Yes, indeed.
All right. First question for you. So having an amazing real estate event, Gateway to Freedom, this will be the 2nd year you've done it.
Yep.
If I'm just a Joe Schmo on the street and I say I'm going to go attend this event, it can obviously be overwhelming to have all this information, all this content, all these professionals that have been doing it for years, maybe even decades. And that's kind of the reason why I bring up the time it takes to be able to surround yourself with the people. If I'm a newcomer and I want to check this out, walk me through, well, first off, the website, the process, the cost, and what somebody should expect to get out of an event like this.
Yeah, no, those are great questions. First off, you got 2 days. Today and tomorrow are the last 2 days to buy tickets because we start on actually the only tickets you can buy are for Friday and Saturday, which is great. But you can get tickets for as little as $99. It's $299, and you use the coupon code RICH or any of our speakers' first names. But we'll keep it simple. We'll call it Rich. You put in Rich as the coupon code. You get $200 off that $299 ticket. Makes your ticket $99 to get into a room of over 30 speakers hitting the stage over those 2 days. And if you've been to a real estate investor conference, you're going to know this is different than any other real estate investor conference out there. If you haven't been to one, just going to have to trust me. This is better. I mean, I'm not going to use the word better, but it's awesome. But it's different than any other real estate investor conference out there. Here's why. In a normal real estate investor conference, they may trot up, 10, 15 speakers, whatever. That's fine. But over a 3-day event, the first day is full of information and great, and you're pumped up. That's awesome. Second day becomes more speakers, but it becomes more of a sales pitch for the mastermind they're trying to sell you at the end. And the third day is almost an entire infomercial for their mastermind. With Gateway to Freedom, we don't have a mastermind. We're not selling it. It's not a pitch fest. We have over 30 speakers hitting the stage. Some of them have mentorship programs or coaching programs, and you're more than welcome to take advantage of those programs if you feel like it's a fit for you. But there's not an overall, hey, join the Gateway to Freedom mentorship program. It's $25,000. Nothing like that at all. So don't worry. You're not going to get pitched to join a big mastermind. Okay. You're not. So that's what people can expect. Number one. Number two, I counted up most of the speakers, like the wealth of information and knowledge and experience they have. I stopped counting after 30. After I got to 450 years of real estate investor experience are going to be in that room on Friday and Saturday. That's incredible. And if you can't, if you can't 10x, 20x, 30x your investment, you weren't paying attention. You weren't taking action. Because for $100 investment, if you can't make $3,000 off of that $100 investment, you just put it up on the shelf, didn't do anything with it. So, and I'm not saying any of this to be, a jerk, or I'm not trying to be condescending, but I'm serious. If you have been thinking about getting into real estate investing, this is the conference you've got to attend. If you've been a real estate investor for a little while, this is the conference you've got to attend, because you're also going to make incredible connections with people, a room full of amazing people. We've got sponsors and vendors that are going to be able to provide value for every single person who walks in that room. So the connections you're going to make, even if you've been a real estate investor for a while or even up to 30 years, you're going to meet people you've never met before. You're going to make connections you've never met before. Last year, I kind of did a little reel or something where I was kind of joking, where I heard, because the adage is you never know who you're going to meet at one of these things, right? You don't know, are you going to meet somebody that you can do a deal with later down the line, a partner, somebody you can become a partner with in your journey, that maybe you just happen to meet somebody at the right place, the right time. You guys partner together. You have a company, you partner together and do that. You don't have to do that here. But I kind of joked last year. I was like, I've even heard of people finding their life partner here. I'm not kidding you. I ran into a couple this past year at a monthly meetup somewhere. They both attended Gateway to Freedom last year, and they started dating and were together. I'm not kidding you. It was like, this is hilarious. I was kind of joking about it, but it happens. So you never know who you're going to meet is all I'm trying to say. You're not saying you have to go there like it's a singles dating game or anything, but you never know who you're going to meet.
I love that part of this discussion, because kind of going back to what we said before, that the things that we're talking about, entrepreneurship, side hustles, starting a business, real estate, it's not for everybody. But the people that want to get into it and do it, they have a certain vision, a purpose, and a why. And I would say probably for the majority of people, they're trying to build back an opportunity to take back time in the future.
Yeah.
But that also means sacrifice in certain ways. And the people that are around you, if they're not on the same plane, on the same page, on the same ship,
yep,
and see the value of it, even through all the struggles, all the doubts, when it doesn't seem like it's all going to fit together, you're going to run into some issues. And when you're at an event like this and you're green and you don't know what you don't know anybody there's an opportunity. Yes, you're going to be able to learn from the speakers and the information and the contacts, and maybe you meet a fix and flip lender, or you meet a wholesaler, you meet this person who's got a strategy.
Yep.
That's a big portion of it. But at the same time, though, you're going to meet some people that could very well be in the same stage as you. And that is, I think, one of the biggest opportunities on the ground floor, because like I mentioned Mark earlier, financial firefighter. And when I met him on Twitter in 2022 and had him on my podcast, we were at the same stage of trying to grow a platform. It's not big, but it's bigger than what it was then.
Yeah.
And when you see people out there doing the things that you're doing, like, oh, I see him out there posting, like, we're not getting a lot of comments or interaction, but we're both so we support each other. And if you're a new investor and you want to get into real estate, you find somebody else that's also trying to figure this stuff out, to have those opportunities to build relationships, to be able to have a study buddy or a friend that you can bounce things off of. Okay, well, what are you doing on this? What are you doing on that? Well, how'd you learn that? Well, I talked to Rich, and he said that you should talk to this guy. This guy is the right guy for that. And just to be able to have those opportunities. So there's just, if you want it, you just got to show up.
Yeah, for sure. And And 100%. And when you go to these things, the cool thing with ours is that our speakers are all accessible. You know, you show up and you happen to see a speaker in the hallway. The speaker are real people. They're having amazing success in this business, but they're real people and they love talking to people. They love sharing stories and hearing what's going on. They're real people. So feel free to talk to them. Some people. I mean, we've got a couple, two or three or four folks that are coming out that have huge followings and they're national brands or whatever you want to call it. But most of the people are, I would say, let's just throw a number. Let's say 35. It might be like 34, 33 speakers that we have on stage. All but 3 of them are in St. Louis, doing business in St. Louis, from St. Louis, and they're killing it in St. Louis. So if you're from St. Louis or you live in St. Louis, you've got to get to this. And you're in real estate investing, you've got to get to this conference. You just have to. I'm not sitting here being desperate, like, oh my gosh, you got to buy tickets. No, I'm saying for your own self, invest $100 into your own self to do this, because when you come, yes, talk to the speakers, but be intentional about the type of people you want to meet and network with. Have some questions, intentional questions on what you want to ask people. Ask the things you don't know. Find somebody who's doing something you don't know and ask them questions about it. That's the way you learn, right? Don't be afraid. Don't be in your shell. It's not like we're going to have 10,000 people in the room. We're going to have a lot of people in the room, but not so much that it's going to overwhelm you. So get out there, grow, learn what you need to learn to help your business and to help you invest in yourself. $100 isn't much to invest.
All right, I'm going to put you on the spot.
Yep.
Is there something that you learned about the St. Louis market that surprised you or altered the way you look at things in the last, say, couple of years?
Yeah, no, honestly, yeah. So the rentals I have, I'm transitioning to Section 8 rentals, and we had a speaker last year, Jennifer Donnelly, and I've known Jennifer for a while, but just listening to her process and how she does things, and specifically what she does, really, even though like I said, I've been in this business over 11 years, it blew my mind. Like, wow. So I learned a huge amount that I apply to my rentals as they become vacant. We turn them over as Section 8 is what I'm trying to say, transitioning them. I'm not like kicking people out and say, hey, let's go. So, but I'm taking her model and applying it. But there's that. There's I've been out here a while. I run 2 monthly meetups. I've gone to other meetups a lot, but a few years ago I stopped going to them as frequently. I thought, well, I knew everybody, right? I know everybody. I know everybody there is to know in real estate investing. Huge mistake. Huge mistake. Last year, when we were like hitting all the different RIAs, promoting the event and all of this, it just opened my eyes to how many people I didn't know that were in real estate investing. And that's just the people that go to meetups. Imagine all the people that don't go to meetups. So I was like, I will never do that again. I'm going to at least go to a few real estate meetups every month just to connect. And if people are in that boat, is it okay if I mention this, Joel, that
Yeah.
if people go out to our website, www.g2free.com, that's the number 2, free.com, and I'm not pushing a ticket. I've got a freebie out there. If you want to just know what real estate investor monthly meetups are out there, there's a link at the top of the page that says Connect in St. Louis.
Okay.
Click that link, fill out the little form, and you will automatically be emailed the list of all the real estate meetups that we know about. And I've done extensive research over the last couple of years. So there might be one that pops up here and there that I don't know about, or one that gets canceled or something. I don't know. But that's an extensive list, as an extensive list as there is out there. And I will continue to add to it and take away from it as I go. But that's where you go. You go get that list and start going to real estate investor meetups, even if you don't want to spend $100 on yourself for a Friday, Saturday learning session.
Yeah, because I have.
And if anybody gets that list and you look at it and you say, hey, wow, you're missing so-and-so, or you're missing mine, or whatever, email me, send me a message, tell me, I'll get it on there. I got no problem. I'm not doing anything. It's free, and it's kind of just a service I'm providing to the St. Louis area real estate investors.
Yeah, because right here on the page, I've got this. I typed out the website, so it's stuck here on the screen, so people can see that. And I wasn't aware, so I did that myself. Hit the button, connect, and I see the screen here to fill in the information. So I will do that myself.
Okay, yeah. And it's free. It'll automatically email it to you. And if you fill it out and it doesn't get automatically emailed to you, text me. I will make sure it gets sent to you.
Okay. I want to dig on a few more things on the event.
Sure.
So we talked about the speakers, talked about coming in and trying to learn some things and connect with certain people. Right. If I'm an expert real estate investor, why should I come? Or experienced?
Yeah. If you're experienced, and I'm not naive enough to think that we got all the experience in our speakers. So there are tons of people in the St. Louis area that have been very experienced in real estate investing. You're going to hear something. I get people that come to even just my monthly meetups that have been investing. I mean, they're in their 70s and they've been investing for 30, 40 years, whatever. And every month when I bring a different speaker on, they're like, wow, I learned something. And it's like, you're going to get one thing. But for a platform of over 30 people, if you can't learn at least one thing that's going to pay you back your investment, again, you're stubborn. You're going into the room thinking there's no way I can learn anything from anybody, right? And there are people that do that, right? You've seen them. They're in a room, they got their arms crossed, they're sitting back, and they're like, prove it to me, whatever. It's the show me state. I understand it, but you will learn something. And it's not just, some people think they know, even on one specific topic. I know I'm kind of all over the place here. I apologize, Joel, but even on one specific topic, there are people who think they're the experts in something. And I had a discussion actually with one of these very experienced people who he and I have a fairly similar mindset on some things, and we want to do things the right way. I'm a person that I want to do things the right way. I don't want to screw anybody over. I'm never going into anything with that intention at all. And we had a discussion one time about how to properly raise private money. And I have a mentor, matter of fact, she's speaking at the conference, that taught me the right way and the proper way and the legal way to raise private money. And he and I were talking and we had an agreement. He hadn't gone through that program, I had, and we discussed a few things. And he's like, yeah, that's how I understand it too. So we were set. Well, one time he calls me to say, hey, look, I went to this speaker that was speaking at this RIA, and they were talking about raising private money, and she skipped over these pretty big, red flags that you're not supposed to do. It's like, what do you think about that? I'm like, well, they're misinformed. I don't know. But he, even that, what my point there is, even that guy is always trying to learn something. So he's been in the game, like I said, 30 or 40 years. He's always trying to learn something. And I think in this game, it changes a lot, but it stays the same a lot. I understand that, but there's always something to be learned. And I guarantee you, whatever you learn is going to be worth more than $100.
Is there a speaker that's going to be there this year that wasn't there last year?
Yeah, we got several. Yeah, we got several speakers that aren't coming back, and it wasn't like, oh, we didn't like them. We're mixing things up. Again, we're feeling ourselves out. What do we want? Last year we had 17 speakers. This year we've got over 30. We got panels this year that we didn't have last year. There are speakers. Jamil Damji is a huge name out there. He's a wholesaling expert, but he's going to be talking about different strategies, not just wholesaling, but how to especially. And he's going to be our last real estate investor specific speaker, and then we have a keynote speaker wrapping it up on Saturday. But he's going to be talking about how to look at things from different angles and different exit strategies in very similar situations, but and how to not pigeonhole yourself into like, well, dang, I thought this was going to be a rental. It doesn't make sense. I guess I'm going to walk away from the deal. He's going to show you how to salvage that deal. Anyway, Amy Majori is going to show you how to raise private money. We've got Sam Prim and Lucas Walls out there talking about the BRRRR strategy. If anybody's interested in that. We're going to have a rental properties panel where we've got a bunch of people doing different types of rental property, whether it's short-term rentals, long-term rentals, mid-term rentals. We're going to have a guy on there talking about how he scaled his rental business. So it's a panel, but it's a lot of different expertise. Same thing with we have a women in real estate panel. So ladies out there, we gave a special spotlight to women in real estate to talk about their experiences as a female in the real estate investor community. Because as we know, yes, it's very dominated by men. It doesn't need to be. But it is. But I completely 100% support all the women's groups out there that are doing their thing. And we wanted to give a platform just for the ladies to come out and talk about their perspective on investing in real estate. We're going to have.
I'm going to stop you there. Can you share a couple names on that women's?
Yeah. So on
panel?
the women's panel, we're going to have Megan Greathouse. We're going to have Alyssa Rispoli. One of the speakers, not from St. Louis, Dawn Ogston. She does rentals in South Carolina. South Carolina as well. But she's an amazing person. She does have ties to St. Louis. She has friends and other real estate investors she knows in St. Louis as well. Like I said, Megan Greathouse, Melanie Claiborne is going to be on that panel. Oh, doggone. I know I'm probably forgetting somebody. Oh my gosh. I feel absolutely horrible.
That's okay. That's okay.
Oh, man.
Because I interrupted you and you were going to be talking about another scenario or another person or another.
I mean, we've got, we're going to have a lending panel. So we actually have a hard money lender out there, what is being termed as private money lenders. It's hard money lending from people that lend from their private money. So not like private money lending like Amy Majori is going to talk about, but what people that call themselves private money lenders that are really hard money lenders, but they, they're not an institutional lender, I guess is what I'm trying to say. And then we have Frank Rosica, who is a standard mortgage broker, who is an amazing, amazing person, huge. He's the guy you want to talk to when you're ready to burr, right? So he's the guy that'll help you refinance out of that. But we've got, oh man, we've got some mindset coaches out there. Sean McCloskey is going to be there. We're going to have Sean Greaves is going to be there. We're going to have Joe McCall is going to be there. So those are some of the big name guys that are like St. Louis guys that are having national reaches. So those guys are going to be there as well. We've got, my gosh, I could just keep going and keep going and keep going. But we've got the Godfather himself, Brian Schroeder, is going to be there. He's actually going to be on the rental panel. He actually asked if he could just be on a panel and not do a whole thing. So he wanted to just humble himself and be on his panel, if you will. I think the panels are just as important as individual speakers. I like panels because you get so many different perspectives on a very similar topic. But
who's the keynote?
Keep going on and on. What's that?
Who's the keynote going to be?
Yeah, so we've got keynote. So Thursday's keynote is Mike Kitko. Friday's keynote is going to be Sean McCloskey, and Saturday's keynote is going to be Damon Remy.
Okay.
So I don't know if you guys know Damon Remy, founder of REI Black Book. He's got an amazing presentation set for you all, so I can't wait for you to see it.
Very cool. Very cool. So when this is all finished, I'll start to put some links out there. And then in terms of just technology, anybody that gets this far on this hour and 20-minute live, from a content perspective, like this is going to be accessible on YouTube, on Facebook, on X, but specifically YouTube. Okay. I can take the link, put it into an AI software like a video.ai is just one example, cut it up, find certain clips, and then clips can be sent to you or you can do it yourself, and I can show you how to do it. And then you can post some of these clips on your own thing. Sure. I can show you how to do subtitles. It's really easy.
That's awesome.
Like for you, because now that we have this kind of just side by side talking about the event, there's some opportunity to put a few things out there on your own. So video video.ai is the resource I use. I mean, I spend like $15 on it a month.
Right.
I have affiliate codes. If I did it, I would do it, but I don't. So
right. Okay.
But no, I mean, and I'll be there as well. So I'm looking forward to seeing you and being a part of the process in terms of just being there. So I can't wait for people. And first, I just want to say thanks for making time late, at the last second. But
that's all right. I apologize. It was in an unconventional setting. I had to run in real quick. I apologize for that. Hopefully that wasn't too distracting. I tried turning off my camera once I realized, dang, people may not want to see me walking into Menards. I got to turn this off real quick. So,
yep.
But I apologize.
Well, I'll let you go. Thanks again. And we'll have to do this sometime down the road.
Sounds good. Thanks so much, Joel. I appreciate it.